the issue around funding is the biggest problem that you might face in trying to get into the property market.
Are the funders now, are they accepting, are they more welcoming to people that are looking into getting into that space?
You know, the banks are there to lend money. I mean, that's their job. They don't make money if they're not lending. So they're going to try and do transactions with people as long as the metrics work.
All right, warm greetings to all our viewers and thank you for joining us on this special podcast, the Broll podcast, in collaboration with Amezzo. So we are right here at the Gallagher Convention Centre where we are exhibiting at the Big Five Construct Southern Africa. I'm sure by now you all well know that construction, the built environment, really plays a major role in any economy and is also an important player when it comes to employment creation, expertise, all sorts of things. So we're going to be talking about this more. But now I'm joined by a special panel and we'll be talking and delving into the issues of investment into the built environment. So I have Jason and Sean with me here, but I'm just going to ask you to briefly introduce yourselves. I'll start with Sean.
Thanks, everyone. I'm Sean Berowsky. I head up the Capital Markets Division of CW Broll countrywide. I've been with Broll since late 2008, post-financial crisis. Been through a few ups and downs with the markets and wearing the scars, but also wearing the benefits of that experience as well. So I'm happy to be with you as well.
All right, thank you. Thank you for being with us. And Jason?
Hi everybody, and thanks everyone for having us. I'm Jason Griessel. I head up a subsidiary of the Broll Property Group called Broll Risk Management. We're an outward-facing strategic risk management consulting business. Primarily cut our teeth on East Africa infrastructure projects, working up in North Africa as well. Very familiar with South African development community, and we bring the models and learnings and lessons learned that we've had there into the environment that we now find ourselves in South Africa.
Okay, so first and foremost, congratulations are in order for you guys as Broll Properties, because this is your first time collaboration with the Big Five, Southern Africa, running in its 10th year, right? So that's really a big congratulations, because you brought something new this year. People normally would just speak to the construction part of it, but now we're talking about another different aspect to it. Now let's get into the details of the investment into built properties or built environments. What really are the challenges, or should I say the pros and the cons, when it comes to investment into built environments?
I think typically the issue around funding is the biggest problem that you might face in trying to get into the property market. So if you're an established operator with a portfolio of assets, it's much different to you versus having somebody come to the bank and say, the first time I want to buy my property, I operate my company out of it, I like to buy the property, it's for sale. It's a very different scenario for those two different aspects. So somebody that's got a deep understanding of the property market, but with existing assets, has cash flows from tenants paying, has a loan to value ratio which is sustainable, and they've got a acquisition pipeline. They'd like to carry on investing in the property market. They go to the bank. The bank looks at the existing portfolio and says, yeah, sure, you've got headroom here for another asset.
Okay.
That asset obviously has income as well, and it just reinforces that play. Some of them, like the listed funds and things like that, and property companies have, you go through a cycle. You reposition a property, you then sell the property, trade out of the property, you recycle that capital, you get back in. If that's your game, if you're in for the long term on that basis. So owner-occupier might be very, very different. First time going to the bank saying, I want to buy my property, it's a very different metrics that they've got to run through. They've got to look at the business, they've got to look at the assets, it's got to get valued, they've got to put equity into the property. And the big thing now is interest rates. Interest rates are much, much higher than they were a few years ago.
Skyrocketing.
It costs you a lot more to pay those mortgages, those bonds for longer periods. And that's the difficulty currently in the environment now.
So does that then become encouraging for any person who has interest in investment, particularly speaking to the post-COVID era? When the COVID time came, a lot of people were disturbed, businesses were disturbed. Now, speaking to the issue of funding, which is really the major problem before you can even think of establishing yourself, just like you rightly put it. Are the funders now, are they accepting, are they more welcoming to people that are looking into getting into that space?
Yeah, I think the funders have always, they've always been there. They've got their metrics. They understand property very well. They've been through it, through thick and through up and down cycles. They understand where we are in terms of the market nuances in the different sectors. We primarily get involved in the commercial aspects of property. We don't really do residential, although we sell property to residential developers, but that's not our game. Our game is selling commercial, industrial offices and retail centres primarily. But the banks are there to lend money. I mean, that's their job. They don't make money if they're not lending. So they're going to try and do transactions with people as long as the metrics work. In an interest rate increasing environment, it gets a little bit trickier. You've got to put more cash into these deals. The equity needs to be a little bit higher. And the sustainability on that property in terms of the tenant and the income needs to be there. If it's an owner-occupier, that owner-occupier has to have a strong business. But if it's an existing property company, then they have different metrics. They've got a portfolio of assets they can recycle. There's probably some headroom to take on more debt in that portfolio against another asset, bringing a new change to their tactics in terms of what they want to do.
Okay, so how have the trends been? How has that affected the trends? Are we seeing an upward trend, a downward trend, more stagnant trend? What are we talking about here?
Yeah, I think, like any cycle, the winners and losers. If you've got property in the right location, the right quality, you've done very well. Office market, everybody's heard all about the office market to the nth degree. We've had the work from home pandemic. It's run its way through that part of the market. I've just given a speech about this a few minutes ago in the room, where the hybrid working model has impacted the occupancy densities of properties, and landlords that are holding big buildings had to find new tenants to take up that stock. So there's been a lot of vacancy. It's put pressure on rentals downwards initially, plateauing now, getting better in certain areas, particularly in Cape Town and Durban, where call centres have come through.
Okay.
And that's re-energised the market there. In fact, in Cape Town, can't believe it now, but 12 months ago I would have said never, but they're now thinking of building. They're not thinking, they're going to build. They're going to build new office buildings in Century City, and Zemprop are going to build new offices at the River Club development, their Amazon development. So nobody would have expected that 12 months ago. It was so crazy. 1 in 4 buildings is empty. Why build an office? Well, the market has changed rapidly in the last 9 months in certain nodes.
Okay.
Sandton still got issues, and you've seen a flight to quality there, where tenants are taking. If they've got a requirement, they go to the best building because the best amenities there. Prices are lower than what they were pre-COVID, and they're taking up space there. So A-grade stock and B-grade stock has suffered tremendously. Some big vacancies there. You can't repurpose every building, so you're going to need economic growth. You're going to need tenants to come back. Grab tenants from outlying areas to attract them, change the building, capex spend on those buildings to attract them, long rent-free periods, all sorts of,
there's
sorts of opportunities
like that?
to bring
rent-free
people.
periods? That sounds...
you got to do what you need to do.
Encouraging, actually.
Absolutely. So benefit for tenants. If you're going to sign a long lease, in the last couple of years you've done very, very well. So
definitely doing things by a different set of rules, since this COVID has struck.
Definitely, you had to adapt to the situation. In the other sectors, like the retail, convenience retail has been excellent.
Okay.
Rural retail has been excellent. The large shopping centres took a big dip initially post-COVID. They've come up rapidly again, so they're doing really well. We've got an energy crisis, which you're seeing every roof get solar and batteries.
We are all
and
talking
backup
about
storage
the energy
and
crisis
things like that,
right now.
to help keep the lights on, keep trading. Those costs have come back to the tenant. We're paying it as consumers because they pass it on to us.
Yes.
As we've seen the inflationary pressures come through. Industrial has been the biggest winner post-COVID. A couple of signs now that smaller industrial tenants might be struggling a little bit. So the cost of diesel is expensive.
Yeah.
It's added another line item to their P&Ls, which wasn't there before. Can't pass everything on to the consumer because there's a limit to how much we can accept, and that's potential worry.
Okay.
But also industrial has performed very, very well.
Okay, I'll come back to you, Sean, because you spoke about something that just caught my attention there. Rural retail. You said it has improved. I'll come back on that. But Jason, coming to you. Earlier on you spoke about reality versus adversity. Can you explain that a bit further?
Yeah, I think when we talk about the sentiment or the perspectives in the market, it's very different to what the reality is. In our view, we look at the hard numbers. Sean did a presentation earlier on that spoke directly to numbers, and I mean, we put out our forecasting on black and white numbers. So when we look at the perception in the market is South Africa is in deep trouble. However, the reality on a commercial element is that people are building, people are repurposing, people are going back to work, and we're seeing these trends not only happen in the Western Cape, but we're seeing interest from the motor manufacturers in the special economic exclusion zones, like Saldanha, like the EDZs up the East Coast. So there is a difference when we talk about the risk and threat. So we stand at a risk of creating a perception that drives away any and all interest of investment. That's the long-term risk. The threats we face are things like grey listings, as an example, extortion in the construction industry, which we can maybe touch on a little bit later as well. The ease of doing business factor across everything required to develop property and to pass a compliance and due diligence exercise with a bank. There are people getting in to the market now and starting up, and they have a tough task ahead of them. And I'll let Sean correct me here if I'm wrong, but the property industry always used to have a mechanism of risk management, predominantly forecasting from an investment point of view, and then managing the income. But now those things include political risk. They include
risk, you say?
Environmental risk. We've seen weather systems, 100-year weather systems, rolling through parts of the country that we have not seen for 60-odd years. We've got places flooding that are quite far from the inundation zones. And these will have a direct impact on the cost of your investment and maintaining it. We see these catastrophic events, they increase the cost of holding.
That speaks to the climate change, to the aspect of the climate change.
Absolutely. So it is daunting, but it's manageable, with the right data insight. So going back to your question, the difference between perspective and the reality on the ground. Everybody has the tools and accessibility.
Did I say adversity? My apologies for that. Perspective. There we go. Yeah.
And the perspective at the moment is what is delivered in some part by media and in some part by social media. And it isn't always the correct narrative. So, what we suggest, and when we talk about a crisis is, it depends. It can be a short-term crisis, it can be a perpetual crisis over 5 years that a whole region goes through. But when in crisis, one of the fundamental building blocks of managing that crisis is getting access to objective information. And that's why we report on the numbers, because the numbers are objective.
All right, so, speaking about the different trends which you mentioned, right now we are in a world where things have really changed. I know that we've gone into what we call the new normal. The new normal comes with a 4-day working week, no longer like maybe 6-7 days that we used to see in the past. We talk about the issue of smart cities. That means that there's going to be a move maybe from the old buildings that we've seen now into obviously the new smart cities and building that new smart city. How does that have an impact on what you do now, whether negative or positive?
It's a very good question. I think from my experience, if you take somebody that used to work 5 days a week, Monday to Friday, and you allow them to have an element of hybrid working, either work from home, work from a coffee shop, etc., you've definitely seen impacts on the cities where they used to work and the traditional office zones changing. So you initially saw a lot of those line shops that service the office workers struggle. Some restaurants closed, some coffee shops closed. But on the flip side, you're still going to go and get a sandwich. You're still going to go and have a coffee. Often you didn't do that just at your home. You'd go out to the convenience centre near to your home. So you've seen that benefit from the work from home scenario
Okay.
playing out of offices.
Okay.
So there's a winner and loser there. Over time, the tenants are coming back, shops are being repurposed, different types of tenants are coming into the retail space in cities and in the environments where traditionally there was an office zone. So you're going to see that scenario play itself out until there's equilibrium there again, and rents balance out. Some tenants that were pushed out of cities because rents got so high,
Yeah.
they went into almost like convenience industrial space, which is almost like slightly retail-y. They're able to come back to the city now because those office nodes, because the rents have dropped. So there's been a rebalancing and people trying to figure their way around it. But if you go through major places now, old traditional office, we were in Rosebank last night, vibrant, busy. It just shows you how you can adapt over a period of time.
But doesn't the issue of building smart cities then cut down on that? So here's the model, the ideal of a smart city. Everybody's locked up in one big place. You have the hospital there, you have residential areas there, you have your banking, retail there, everything is in this one big place, literally 15 minutes from your door. So you don't get to go out. Doesn't that affect your business in the long term? Because we're moving into that new normal. That new normal that Klaus Schwab has been ranting about for the longest time. It looks like that new normal, we're actually moving to that. How will that affect you?
So I think it's quite telling coming out of COVID and understanding the impacts of being isolated.
Yeah.
And how detrimental. If you look at the divorce rates globally over the COVID,
It was horrible.
it was
horrible.
Yeah, it was magnified. Now, if we do that to communities, okay, and we create bubbles. Now, we live in a country, being absolutely honest, that is possibly the biggest difference between haves and have-nots. And that's not something we should be proud of. The risk that we run in South Africa of building these bubbles is not creating an inclusive environment. And that is so far removed from the theme of Ubuntu that we ultimately want to do. For us to all exist, everybody needs to have a basic standard of living, safety, the ability for your kids to go to school, and the ability to then find work afterwards. And by creating these communities, we see it in the estates element as well.
Okay.
Estates pricing across the country drives a premium in the residential market. And it drives a premium because of the perception of safety in those communities.
Okay.
Now,
Yeah.
that philosophy is finding its way into business, creating nodes of safety and pushing everything else. The challenge with it is that the infrastructure stops at that line, and we need to change that.
You need to fight it. That was the point. Do you realize that it takes you to actually fight this thing off? Because it's going to change the narrative completely. But let me come back to something that you spoke about. You spoke about doing... You've got properties or you manage properties in East Africa, West Africa, and then Southern Africa. What are the difference in the patterns there? Because you go to West Africa, it's a different ball game in terms of infrastructure than what you would find in Southern Africa, likewise in East Africa as well. The trends, is it something that can be matched? What determines the difference of the trends there?
So not speaking from a commercial element, but speaking primarily from a risk perspective.
Okay.
We're finding the models that we used to navigate crises, i.e. political civil unrest, protest action, catastrophic weather events, are now finding themselves very applicable here in South Africa. So if we had have had this conversation 7 years ago, and we had have said, well, we need to get ready for massive civil unrest events in KwaZulu-Natal, would say, well, not really sure. But if we go back 2 years and we see the catastrophic impact of the July civil unrest events and the impact of it on us as a society, we look back at the lessons learned. These are cyclical events that take place.
Yeah.
So we're seeing from a risk perspective, a lot of the risks that we assumed would not happen here starting to manifest themselves.
Wow.
We've seen them also from not even parts of East or West Africa. We've seen organized criminality start to take roots in
Organized group. We're talking about the mafia. Well, that has been a major topic since day one in this conference,
Yeah.
the construction mafia, built environment mafia, and I think it's a major problem that needs to be dealt with decisively. Now, let me pose this question to the both of you. If we speak about risk, come 2025, the so-called globalists are talking about another pandemic, this time around much deadlier than what we had in COVID. So we'll probably see some more isolation, some more lockups, all sorts of things, people not going to work anymore like we are seeing now coming back. What is the future of investment in property, especially pertaining to, such setbacks, if I might say?
I haven't really heard about that next pandemic. Jason, you haven't briefed us properly. I certainly feel that not many people are going to be willing to be locked up again. I don't think that's going
Absolutely
to
not.
I think governments have learned that didn't work. I think the mask mandate and things like that will never happen again in our lifetime, at least. And I think work will carry on. I don't think we'll shut down like we've seen before.
Okay.
We'll have impacts on some things. If a lot of people get sick, then you need to deal with that. Hospitals will be full, and we'll deal with that. But I think people make decisions on property. Property is a very long-term game. You don't make money on day one property. It takes you a hell of a long time to extract value out of it. Reposition the property. You need to hold it for a long time. They're generally very expensive. It takes you a long time to pay down the debt. So decisions in the property environment are made based on 10, 15-year projections.
Okay.
So I don't see a massive change in that. In fact, 2025, if we were crystal gazing here, I'd say interest rates are down again. The environment's a lot better. Everyone's happy. We post-elections a year into South Africa. What that brings to the maybe a lot of people talking about a coalition governments and things like that. I think it's potentially a very exciting place in South Africa to be in. A new environment where things are changing. People are being called out. Mafias are being called out. We're stamping. The rule of law returns, and investment returns on that basis. And confidence. South Africans have confidence to carry on in the country rather than taking money out of the country, investing it here, creating jobs, and creating, as Jason said, safer environments. I think my view, and I think it's shared by Jason, is that we're probably in a better position in 2025 than what we are today.
Okay, I like that as a positive outlook.
Yeah, I'd agree with that.
As a positive outlook.
I think, and to Sean's point, cycles exist in weather, political cycles exist, economic cycles exist.
Yeah.
We're in a difficult cycle. We're also in a difficult state, as a nation. But we're doing the best thing that we can do. We're talking about it. The industry is tackling these challenges in a communal way. People are starting to be transparent. There is no more hiding the facts.
Okay.
There's no more hiding the facts. We have a power problem. Industry is helping to get it sorted out.
Yeah.
These are things that need to be spoken about before we can address the risks. You can't address a risk if you don't know what it is.
All right.
Yeah.
Okay, so in your closing remarks, we've got our viewers that are watching right now. What would be your remarks in terms of encouraging people to come out and get a Broll experience?
Yvonne, we've been through the tough times with the economy, with Jason says the various cycles. We've got a lot of data. We've making predictions on certain aspects within our business. We advising clients much more thoroughly, much more in depth. People have given us placed a lot of trust in our advice. We act for some of the largest companies in the world, certainly some of the largest companies in South Africa, through our affiliate partnership with Cushman and Wakefield as well.
Yeah.
And we continue to learn from what the data provides us.
Yeah.
And our predictions of the future is getting a little bit better. And we continue to refine those policies and that advice that we give our clients. Our clients put a lot of emphasis on that with us. We've gone through the journey with them. They've got their own data inputs as well. They it's a symbiotic relationship. We learn from them.
Yeah.
They tell us things we don't know about. We learn. We take that forward. We implement it with other strategies as well. So we can adapt policies from one client to another. That's worked. So we see that in a live currency. We see it today. We manage hard buildings. We understand what happens in these properties, and we understand the people that actually need to occupy these buildings and what it takes. So when we're advising clients to take new space, we understand that. We understand the pitfalls. We understand the risk management that we provide and we advise on, and we mitigate pitfalls. So we're getting better at that every year. It's incremental. Our teams are very strong. We've been with Broll a long time. We employ young people. We bring new people in that have different ideas to us, different backgrounds to us. It helps because it gives you a better aspect on the entire environment that we're operating in, and for those reasons, I think we're in pretty good shape. If you want to talk to CW Broll about anything commercial, property, industrial, retail, etc., you're in pretty good hands.
All right, I like that. All right, thank you. Sean, Jason, thank you so much for being with me today on this special podcast. And to our viewers, this is the Big Five Construct Southern Africa. Make sure you make your way to the Broll stand and get more information on what we have been talking about. Thank you so much. Stay with us as we continue to bring you more updates.